Welcome. It's your man, Don Bucks. Welcome, everybody, man. Another episode of Cheef in Charge. It's your man's. What's up, man? Hey, listen. I'm gonna start off like this. First off, today's episode, Purple Haze. This episode is called Purple Haze. Why? Because that's what I'm chiefing. Listen, man, stick to your script. And sometimes I'll be talking to myself. Y'all notice that sometimes when you teaching something that you kind of reinforce it within yourself. Hit the like, hit the subscribe button. You've never seen a show like this. This is sponsored by Rapidil. Y'all see it in the background. This is the home of money conversations. You feel me? That part. So if y'all was here yesterday, hey, make sure y'all hit the notification bell because we talk options, we talk stock charts. This is the first kind of show you've seen like this ever. Joke mixing stock charts with weed smoke. You feel me? You're used to seeing the suits. And it's cool. I got a few suits. But you're used to seeing the suits with the confusing words. So we talking options, we talking stocks, and the plays. We talking about seeing what I see, what Don Bucks sees, right? And who was Don Bucks? Who was this guy to tell me about some stocks? I got a few results, and I got a fire coach. Okay. And that's one thing that I highly suggest people have is a coach. Don't feel like you know it all. Get you a coach and lock in with it. You feel me? Because that's exactly what I did. But y'all know I'm trading one stock. I tell everybody to trade one stock. You just started trading options. You trade one stock. That's all you need. It's enough to look at on the chart of one stock. Plenty to look at. So y'all know I've been trading MO. And yesterday, I told y'all, let's go to the overall market. Now, y'all know we start off with looking at the overall market. And I told y'all that today, that was today the 21st. So yesterday was here. And I said I had an idea that the market was going to go down because I have these levels drawn out here. And let me show y'all these levels and show y'all what I mean. So being that this was the 20th yesterday, at the end of the day, when I came on, this is what the chart looked like. Now, this is the 15-minute. Let me go to the daily, actually the hourly. Because the hourly is my trading time frame, and I tell y'all, you need a trading time frame, right? So yesterday, mine is the hourly, right? So this is what we looked like yesterday. And that's crazy that I said that. I got to go back and watch the tape. But based off of this right here, this was yesterday's bar on the hourly at the end of the day. This red bar right here. Being that it sold off heavily because it hit this resistance, this possible resistance, it hit it. Being that it hit it a couple times, this is actually a level here. It hit it at a pin bar, came down to support. Now, mind you, it done broke out of this downtrend. Y'all see this blue line? This was the long-term downtrend it's been in since January. Everybody been screaming about the stock market since January. You ain't been hearing nobody talking about the stock market. That's why I've been like, yo, where everybody been at? Man, where y'all been at? I think a lot of y'all done lost a lot of money. Y'all probably like that somewhere. You know what I mean? Crying. Dissing options. I hear y'all. Y'all probably dissing options. No, options work. Y'all just been over leveraging. I talk about that in my course. You only supposed to be risky what you can emotionally stand and lose. 10 trades in a row. So if you can lose $100 10 times in a row and still be good, still be able to pay your rent, bills are still being paid, maybe $100. What I said, maybe $100 is your threshold. So you need to be looking for $100 contracts. Maybe your threshold is $20. Maybe you can lose $20 and emotionally be cool 10 times in a row, right? Maybe 5 times in a row, because you can't, if you're using the proper, if you're doing your due diligence, you're drawing your levels, you're knowing your trend, you're on your trading time frame, and you're exercising your edge on a consistent basis, you're not going to lose 5 trades in a row. But let's say you do. How much are you willing to lose 5 times in a row and be okay? Because that's what you need to figure out. Because those are the kind of contracts that we're going to be looking for. Because if you're comfortable in a contract, you're not worried about the money if the play is going against you in the slightest. You're not worried about it. You're worried about your strategy staying intact. If you're worried about the dollar amount that you're down at the moment, you won't be taking into consideration that your play is about to be in the money. Like you're about to be in profit if you just let it cook for maybe another day. And I'm talking to myself right now, because I did that today. And I did that yesterday. Jumped the gun, took profit too early yesterday. And then I sold. Let me show y'all what I did. I'm rusty, yo. I ain't even gonna hold you. I'm rusty and I'm still 8 for 12. No, 7 for 12. Right? So just imagine if I wasn't rusty. But I'm back in and I'm up. So I'm back in. So let's go to my stock and show y'all what's going on. So if y'all was here yesterday, y'all know I'm trading MO. See, it's already marked up like a Subway in Harlem. So here's my trading time frame, which is the hourly. This is trading in a range. It's not trending. It was downtrending, but now it's trading sideways, as you can see here. It's trading between 41 and 44 bucks sideways. Up to there, down here, up here. So I have my levels drawn out on this time frame, because this is where I'm making my entries and my exits based off of my levels in this time frame. That's what a trading time frame means. Because if I go to the 15-minute, the levels are different. So then my entries and exits will be different. So that would have to be my trading time frame if I'm going to be using those support and resistance levels, because those are different from the ones in the hourly. So you have to make sure that you're trading in you're entering and exiting on your trading time frame, but you're using the relatable time frame to manage your trading time frame. Okay, so I'm using the hourly. And yesterday, so what I did was I took a call right here because this is my edge. I like bounces off of support. I like pin bar bounces off support. This is why trading in ranges is more difficult than trading in a trend, because trends have a more predictable nature and price action than trading in a range. And this is a prime example because levels get violated like a motherfucker. So level got violated because I was thinking bounce here with this pin bar. I should have waited, but that was my edge. Like, your edge is not going to work 100% of the time. It worked I was 7 for 10 coming into this week. So your edge is going to work the majority of the times, but sometimes it won't. So I took a call here, expecting it to bounce. End of the day, it dropped. This is a green drop. It's crazy. But I didn't peep this green drop. I'm not sure why I didn't peep this green drop, but that would have held a different amount of significance to me if I would have peeped the green drop and seen this buying volume. I don't know why, but this morning it didn't look right to me. So I figured the trade was against me. So I cut my losses, 25% loss. I wasn't over leveraged, so I'm not mad at it. But I hopped back in towards the end of the day because I like to swing into the next day. So on the -15, let's see if I can make this. Sometimes I like the iPad, sometimes I don't. See the chart. Here we go. So this is what the hourly looked like. Let's see what the 15-minute looked like. This was yesterday. So it dropped down to here and it was beyond. I was like, I thought it was gone. I should have seen that it hit another level, but I didn't. I don't have that level marked. Oh, yes, I do have it marked. That's crazy. I do have it marked. Unbelievable. I got the level marked, y'all. I sold down here. Took the call yesterday right here. That's my edge. Trust, stick to your script, man. And shout out to putting time on your contracts, because I had time on the contract. I could have sat in this and seen that it was bouncing off this level with hella volume. I took a loss for nothing. Took a loss for nothing because I didn't stick to my script. Level was right there. I got the level drawn and it's clearly bouncing off of it with volume. Trust your play. Trust your edge, y'all. So took a loss for no reason. And it came back up. So what I did was I waited to the end of the day and I waited for it to bounce right here. So I'm in it right now. I got in right here, took a call. This is why you don't need more than one stock. You just wait for your edge on your one stock. So I wait to the end of the day and see if there's an edge. Lo and behold, end of the day, I seen this right here. And I like it. It's a bounce off of a dip. You see, it came down and it's bouncing. Pin bar at support, potential support. Looked at the 5-minute and seen that it was done falling, because now I could see what's inside of the 15-minute. Yeah, I'm looking inside of my hourly in the 15-minute. Like, oh, okay, that's what's going on in my hourly. Like, damn, look at all that volume. Then I can see what else is going on inside of the 15-minute. Divide 15 by 5, you get 3 to 5. Well, divided by 3 to 5. So if you divide it by 3, you get 5 minutes. That is a relatable time frame. So now I get to see what's going on in the 15-minute. So look, if I would have seen this right here, I would have seen that it was bouncing crazy off of a level with hella volume. This is how you dissect what's going on in those bars, by going down into the relatable time frame. So I would have seen, I didn't need, that was my fault. I'm rusty, but I'm still 7 for 11. Tomorrow I'm gonna be 8 for 12, because this play that I'm in now, this one right here, is I'm taking profit tomorrow morning right here. I'm already at like 10%. So you got to trust your edge, because these right here, sometimes they get you. Can't win them all. I tell you, can't win them all. You can't be bent out of shape. This was my edge. I got caught slipping. I didn't dissect further enough, because I would have seen this right here. I would have dug a little deeper. Right? So I'm back in it. I'm back in MO. This is how you could trade one stock and just ride the wave. Look for your edge. You dig? If y'all want to see me dissect your stock, go ahead and leave it in the comments. Make sure you hit the like and subscribe button and hit that notification bell for when I go live, because I'm on here every day. Sometime I'm thinking about going in for Power Hour. I may, and show y'all where I'm taking a trade at the end of the day. I might start doing that. But y'all want me to dissect the play, make sure y'all leave it in the comments, but make sure y'all also hit that notification bell. All right. So till tomorrow, keep Cheef.